Hey everyone, it's Andrew King with Monarch Lender, and today we're going to be doing a deep dive into how to use AirDNA income to qualify for a DSCR loan, especially if you're looking to finance a short-term rental like an Airbnb or VRBO property. If you've ever been told that you don't qualify because you're self-employed, the property is vacant, or there's no lease in place, this is the video you've been waiting for. We're going to cover how to pull and interpret an AirDNA report, what lenders actually look for in that data, what to do if the AirDNA income doesn't work out, the benefits of interest-only DSCR loans, appraisal pitfalls and how to avoid them, non-TRID warning signs, and we'll get into what TRID means in a little bit here. And yes, you can close in an LLC. So whether this is your first Airbnb project or you've got 10 of them already, I'm going to show you how to set up your deal for approval. And if you're watching this video, I'm guessing you probably already know what a DSCR loan is. But if you're new to this, a DSCR loan is a debt service coverage ratio loan, which qualifies you based on the income of the property and not on your personal income. And here's the formula. It's just your monthly income from the house divided by the monthly housing payment, and that gives you your DSCR. The higher the ratio, the stronger the deal. Most lenders typically want to see a ratio of 1, but if we're using short-term rental income to qualify, the bar's a little bit higher. They're usually looking for 1.15. The short-term rentals don't usually have year-long leases, so how do we come up with an income figure for these properties? That's where the AirDNA comes in. It lets us estimate how much your rental will earn based on similar comps in the area. Now, many lenders will take an AirDNA report in lieu of the traditional 1007 rental report for income, especially on purchase deals. So it's a great tool when there's no lease in place or operating history yet.
All right, so let's walk through this together, guys. I'm at AirDNA.com, and I want to show you an example of what lenders are looking for here. So you want to go in the rentalizer here, and you can search by market, submarket, or address. I already have an address in here. Pick one in Coachella, so obviously that can be a big Airbnb market, Coachella Festival, and Stagecoach, all that stuff. So the big thing that you're going to want to look for here is the revenue, obviously, and they do go off this top line number. Obviously, you're going to have a lot of expenses involved with the Airbnb, but they don't look at that. They just look at this number, operating income or projected revenue. But here are some more nuanced things you're going to want to look out for. Submarket score, lenders are typically looking for 60 or better. So if it's not really an Airbnb market, this might not be the avenue using AirDNA income. They do exceptions for that. And then the other thing that can knock this down is the occupancy. So this one's 39%. We're usually looking for 50, so that could be a potential deal killer there. But there are other options. We can just do a full short-term rental appraisal, send an appraiser out there and have them pull short-term rental comps, and then the occupancy is less of an issue. And then the other thing you want to look out for is the bedroom count. You want to make sure that it matches the appraiser, what the regular appraisal says as far as the bedrooms and bathroom count, etc. So obviously, when you're buying a property, there's not going to be appraisal right off the bat. So you want to get that in as quickly as possible and then make sure that it matches what you're running on your AirDNA report. So let's just change this. Sometimes, there'll be an illegal addition, a garage conversion that added a couple rooms, something like that. And so the number of rooms can change the occupancy and then also the revenue. So let's just say this house was actually 6 bedrooms. Let's see how that affects things. So that bumps it up to 50% occupancy and $158,000 in revenue for the year. So something you definitely want to look out for. You want to make sure that all matches. And then the other thing, we touched on this, they're typically looking for a ratio, a DSCR of 1.15 or higher if we're using AirDNA income to qualify. And so, the income's usually quite a bit higher on AirDNA, so that's not usually an issue, but we do have the ability to qualify on an interest-only payment, which can help you qualify for more if it's close, and then also just improve your revenue. If it's a rental property, you can have a little bit lower payment there. So that pretty much wraps up my AirDNA demo. I have a paid account, so yours might look a little bit different, but you should be able to get pretty much all the info you need on the free version. So if you want me to run a report or something, feel free to reach out, but this is what we have for now. Thank you.
All right, so just to recap, if the AirDNA report doesn't look strong or doesn't meet those guidelines we just went over, don't panic. There are plenty of alternatives. You can order a short-term rental survey through an appraiser. We can use bank statements showing actual Airbnb deposits or deposits from your business if you're self-employed. Or we could possibly use statements from your property management service if it's already being rented as an Airbnb. Lastly, we've made it work with the long-term rental appraisal as well. a 1007 report showing the long-term rents can sometimes make that payment work as well. So AirDNA is a powerful tool in our tool belt, but it's not the only one out there. Now let's go a little bit deeper on interest-only loans. Many of our DSCR investors will allow a 10-year interest-only period. And the best part is you can qualify using that lower interest-only payment. The benefit of that, it gives you stronger DSCR numbers, better monthly cash flow, and more flexibility, especially in the early years when you might still be furnishing and stabilizing a short-term rental. And here are a few more things to keep in mind on a DSCR loan. We can go as low as 15% down on strong files. You can close an LLC, and yes, non-permanent residents and foreign nationals can qualify as well. And even first-time investors are eligible with the right credit and right DSCR. Now let's talk about appraisals, because this can make or break your transaction sometimes. So even if we're using AirDNA to qualify, we're usually still gonna order a 1004 regular appraisal to assess the value of the property and a 1007 appraisal to get the long-term rents, and we can use that as a backup plan as well. Now you can't choose your appraiser anymore, but you can choose your AMC, your appraisal management company. And trust me, not all AMCs are created equal when it comes to the short-term rental appraisal. Some will assign appraisers who aren't experienced with short-term rentals, and they'll cancel later, or they'll come back after a week and say that they can't find any comps. That kind of delay can kill your escrow timeline and put your earnest money deposit at risk. At Monarch Lender, we work with AMCs that know how to handle STRs the right way. That way your deal doesn't get hung up waiting on a report to come in. Something important to note, most DSCR deals are non-TRID transactions, and TRID stands for TILA RESPA Integrated Disclosures. So that means faster closings and less paperwork. However, there is a downside to this. Lenders don't have to follow the typical loan estimate and closing disclosure process that they normally do in residential transactions. Some lenders will take advantage of this and add last-minute fees or bump up your rate unexpectedly right before closing. So make sure you're working with a lender that you trust to give you real numbers up front. Let's do a quick recap of what we covered today. How to use AirDNA income to qualify for a DSCR loan, the lender expectations, 1.15 DSCR, 50% occupancy, and 60% market score confidence. Why interest-only qualification can help, what to do if AirDNA doesn't work, appraisal tips and AMC selection, LLC closings, and non-TRID warnings. So if you're looking to buy a short-term rental and you think about using AirDNA income to qualify, let's talk. I'll help you run through the numbers, compare programs, and help you avoid some of the landmines that trip up investors. You can book a free call with me at calendly.com/monarchlender. If this video helped at all, hit that like and subscribe button for more insider mortgage tips, and drop your questions below. I'll answer all of them for you. Thanks for watching, and we'll catch you on the next one.